Welcome to Trading Lounge and the Australian report, and starting with the ASX 200 here. This particular sideways pattern here is still unresolved in terms of moving higher or lower, and we just need to be on guard for either direction, and we need strategies in place and price levels of support or resistance to make a move long or short. So we still need to be open-minded here, and I'll just sort of explain why. Because this particular pattern here, it can be counted. We're looking for wave 3 here, and we're looking down for wave 4. So it's possible that this can sit like this here as wave 4 in here, and this particular pattern here finishes off as a ending diagonal triangle in here for wave 4, and then that means that I'll be looking at both sides, but that could be wave 1 here and wave 2 here, with 5 waves up here, then an A wave and a B wave and a C wave here, and moving up here for 3, 4 and 5 and so on, moving to the upside. So it is important that we do look at the bullish side for this market and not forget it, especially why all the open and closes through here are still pretty much gravitating towards the center of the particular range that we're working in here. The other point here is that this is wave 4 down here, wave C of 4 here. This wave B here, this B could be over here as well, where we get a move up here back to the 61.8% mark here, and also move back down through here as well. So this would pan out here, if I can just use this over here, as an A wave here, a B wave into this space here, and then a C wave up here, and finishing here. So there's two sort of upside patterns there that we've been looking at. This other particular move for the downside here really places wave B here, and we're looking at wave 1 here and wave 2 sitting on this little one here, and we would be looking to move lower from this particular high here, and this is what we've been talking about here: wave 1, wave 2, wave 3, 4 and 5 in here. So if I go to the 4-hour chart and just sort of drill into that a little bit here, this is what we were looking at here last time we spoke. We were looking at this as being wave 1 down here, and then looking at this as wave 2 here. Now wave 2 would pull back 61.8% roughly of the previous move down, but it's moved higher than that. The 61.8% would come to about here somewhere, so it's actually moved higher than that. We know that all the retracements within this space here have been moving past their 61.8% mark, so it's not a big deal. So we can still have this count of down for 1, back for 2, and then moving down lower for here for wave 3. So we basically need a strategy to be long or short here. This here on the cash market looks like it can be 5 waves up. I've got it labeled as, if I can just go to the tick chart now into this little space here, because we were looking at this, counting this as 5 waves down here. I didn't have a problem with that, as you know. And then I was looking to the upside. So on the upside here, we were looking for a 61.8% mark here. Not that that's hugely important based on the sort of historic moves of this particular pattern that we're in here, but it's good to know. So that's way down here, so it has moved beyond that. But as a wave 2 here, it can still be in place as long as it doesn't take out that previous high here. So we can still have this as 5 waves down for wave 1, and then an A and a B and a C for wave 2 here. But this does look like an impulse wave to the upside here, so I am concerned about that. So On this market here, I can count this as an A wave here, a B wave here, then 1 and 2 and 3 and 4 and 5. I don't have a problem with that of being an A wave and then a B wave here. But on the cash market, this move up here, the physical market, it just counts as 5 waves, not as corrective. So that means that realistically, that can be wave 1 here, where the A wave is here. Which puts this more into a bullish mode here. So if we consider both sides of this for a moment, we consider this as wave 2 up here, and then we'd have a bearish pattern. So the bearish pattern would be 1, 2, 3, 4, 5. So we've got 5 waves here in the opposite direction of the trend moving up. So that means we'll get an A wave and a B wave here, and then a C wave here. And that's that little area here. I can just move this now. Oops, wrong one. That. Yes, from this top here we've got 1, 2, 3, 4, 5. Quite clear 5 waves. So that means that after an ABC correction, we're going to get another 5 waves over here. Okay, so that's the way that should play out. So in a way that if it was bearish move, if I can just borrow that, then that would be wave 1 here and wave 2 here, and then we'll be going down for wave 3 here. Okay, so what I can say today is that I can't draw on this side over here, but basically 5 waves up here, it'll hit the 5750 area here, and then it will pull back in 3 waves and try and make another move up into this space here, and then it should drop from that point. The other point here is that let's just imagine the other side of the market for a moment, and let's imagine this as a 5 wave structure up here for wave 1, and then a wave 2 coming back. And this box here is the 50 and the 61.8% retracement level. So the move coming down from wave 1 to wave 2 would be an A wave, a B wave, and a C wave here. So we would get an A and a B and a C wave here. So I think that either of these counts is justified. In a nutshell today, we should see the 5 waves down, 3 waves back up to the 50 area here, maybe a bit higher, and then 5 waves down here. Now, if it was going to be any more bearish coming down here, say wave 3, wave 1, wave 2, and wave 3, then we're going to see a move under the 5700. Now, just to sort of explain this again here is that this 5700 has always been our bearish signal, but what we've been waiting for is a failed retest. So I can draw on this side here. So we've been looking for a move that would come down here, move back up, retest it, and then that low that it's got in place, take that out and move down. In this case here, it's this low here, and I thought we might get that after the rally to here and then come down, and would go through that process again, and that's fine. So that's still the case. Don't forget about that. If that, I can't draw on this side, if we do get a move through the 50, obviously group 2 below the 5700, 65.72 and the 80, like over here, is the critical support here, and that once that, because when you talk about the 5700 here, you've got group 1 above and group 2 below. There you basically, your sort of support and resistance on a smaller degree of structure that would help with this here. So if I was going to go long here, then I'd go long on a tested support here. So I would go long on here. Not that you can't go long earlier than that as well, but this would be the setup here, that nice sitting on that top of group 1 here, the 30 here. So that 30, that group 1 and group 2 is really important to help with support and resistance and triggers to go in either direction. So yeah, look, I don't know the count, and but the intraday count, because we got 5 waves down here, we should get an A wave to the 5700, then a B, and then a C wave up here, and then 5 waves down. The 5 waves down, if it just comes into this 5720 area here, and then starts to move up from there, then it's bullish from that point. So You'd go long again on 57.50 over here, but any stronger move down here, you would need to see that 5700 here as a trigger. I can look to the banks, but all the banks are telling me different things, so I can't get a clear sort of indication on things. But if I look at, just bear with me a second here, this is the XXJ here. Let me just bring this into perspective here. So just wanted to have a look at the volume here, just to, I mean, the XXJ is the banking sector. So this is a, where are we here? This is a monthly chart here. So I'll just go to the quarterly chart here. So this is the quarterly chart. So we can see, in terms of reading volume, we can see that, well, this move going up here, yeah, it moved back up to it. We had this sharp drop here, or reasonable drop here, and then we've had this move up through here. This move up through here on well, this bar here, even though it went up a long way, it actually had lower volume than its previous bar here. This went up higher here, but also had lower volume than its previous bar here. So that means that that's divergence. That's what you'll see in the RSI indicators and so on and so on. So it's not going to go up for long. Then we had this strong move down on the quarterly bar here with quite a lot of volume, more volume than the previous bar. So this is normally a turning bar to a point here. Like this one here. This move that's moving up here, we would look at this volume bar here, and if it moves up on less volume than the previous bar here, then we also know that it's weak as well. But because it's a quarterly bar and that quarter's not finished yet, we can go to the monthly and have a look at this little move up here, and you can see here that even though it's moving up here, you can see that it's moving up on less volume each time. So this one here moved up on lower volume than its previous move down. This one here's moved on lower volume, but moved to the upside. This one here, well, this month is not only halfway through just yet. I understand that, yeah, a couple of things. So basically it's telling me the move up is weak. But at the same time, I know that when you've got wave 1 and then wave 2 and then wave 3 and 4 and 5, you can get this in wave 1 going to the upside. So it's not a huge help, but it is some help. But we're not seeing volume come into this particular play here yet within this market here. So the other point here is that this move here has got 1 and 2 and 3 and 4 and 5 here. So I count that as 5 waves, even though that wave 4 moves into the price territory of wave 1 here, because otherwise, if I looked at that there, that would break an Elliott Rule. So then I would go an A and a B and a C for the A wave here, the B wave here, and the C wave here. And that's doable there, and then we can move straight up from there. But a couple of problems here is that I can see here that this is the third wave in here, the strong wave here. So we could look at this as wave 1 and 2 in here, and 3 and 4 and 5. But then we've got this here. So this it's possible that this can be an A wave, wave 1, an A and a B and a C here for this, and this can be a wave 4 moving back here. But we wouldn't want to see this market become any weaker than it is here. And there are cases for markets to move higher. So when I look at the Bendigo Bank here, for instance, this is a daily chart on Bendigo, we can quite easily see here that this is in 3 waves here now, and that would be confirmed once these highs get taken out here, and it's probable that this high can get taken out here. As soon as that gets taken out here, that actually makes this an A and a B and a C for Bendigo Bank, and then if that's the case, then we'll be taking out this high here as such. So I've got a positive thing for this particular bank, but I don't have it for like say Westpac on here for a weekly chart here either. I've got this move up here as, I've got this move down here as a corrective wave. So I know it's corrective. So I always figured we could go straight up from here, or we're going to go up to the 61.8% mark here for this here. And then we're going to come down for wave C, which would be, which would have wave 4 sitting over here. And wave C would essentially be wave 1 here, wave 2 here, 3, 4, and 5 coming down here for wave C. This will be a smaller degree though on that, but that's the thing. And the thing with Westpac here, it came right back down. Do you know what I mean? It's overlapped all these other structures here. The only other count I could see here that would be bullish would be an A wave, probably C wave here, and this one here, and this one either here or here, and that's it there as the A, the B, and the C here. So that's really quite possible for this market as well, and we'll move up through here. But at the same time, it hasn't moved up to where we want it to move yet to as a bullish move. These moves up for Westpac and ANZ can be bullish, or they can be bearish. We just need to spend a bit more time with them before I can realize that. This is ANZ here on the daily chart here, and you know, this was a very swift move down through here, very typical of an A wave at least. So this move up through here, it can be counted as a bullish move, or it could be counted as a bearish rally, but that box is the 61.8% mark. Now this particular pattern in here is in 3 waves, so it's quite logical for this to make another move up here. So we'll see. It needs to take out this little top here to confirm that. Once that's taken out, then I know that we'll take out that top. But that still doesn't give us a bullish pattern at this stage. It can still be an A wave here, a B wave here, then 1 and 2 and 3 and 4 and 5 to here. So what we normally do, as you know, is that this is a level here, and the market's sticking to it quite nicely. So that's good news. So this would be the if we're looking at the classic trading levels pattern here, this would be the arrival, then the reaction here, and then the first high above the level. So this would be the first high above the level. So then what we wait for is an A and a B and a C correction here, but at the same time we put a trigger here. When we get our second high, we put a trigger here. And if the market, this will be an ABC here, if this market then moves up through here, then that would be the trigger here and the other trigger here. So then we would be bullish would be bullish then. But what we have to wait for is we have to wait for this to move up and then correct back. And then if I can identify this as being corrective, or we get support in here, this is where we go long here. So there's still, in terms of going bullish within the banking sector, I'm not seeing any volume come in. I do see patterns that can take it higher. And if we're going to go higher, then what's our setup? Well, this would be the setup for ANZ on this level here, and other markets would have their levels there as well. So we're a little way off. Even though the banking sector can move higher, we're still a way off of actually being long in those markets just yet. So I just thought I would sort of explain the banking sector a little bit. This one here for this market here, the Westpac here, if I put this onto a daily chart here, don't worry about all the labeling here. What I want to point out here is that the move up through here can be bullish or it can be corrective. The thing is that the 61.8% mark, our target area here, was the $33 mark here. So this is also interesting for Westpac as well, because this is group 1 here, so 31, 32 and 33, 1, 2, 3, group 1. If that becomes a tested support, and then that would be the same with ANZ at the $30 mark. If we got to move up through here, so then we're going to get some sort of corrective move here. So it's only at these stages here that I could say with confidence, if they were triggered, that we're going to be moving up much further from that point. That's a good thing about group 1 here. So with ANZ and WBC, they will be our triggers to be long, in the bigger picture. So of course you can trade higher here as well. I mean, but even for this market here, from that high here, coming down here, it appears we've got 5 waves with an A and a B and a C here. So this can also drop here. So the short trade realistically is under those lows here, and then that would take it lower, because if this was going to go low from here, then it's going to go, this would be wave 1 and 2 here, and then 3 and 4 and 5, down into this space here, lower anyway, So it's quite important. There's going to be a trend out of this either way, and we just need to look for those setups. So it's just a little bit more time with the banking sector as such, and so I don't have any answers, but that's as much as I know. Alrighty, cheers.